So, come to order. Okay, thank you all. We're now in public session, and we're continuing, or really the start of the public session on our hearing into consumer protection and oversight in relation to the Schedule I banks. And we have with us for this session the Financial Consumer Agency of Canada and the Canadian Bankers Association, and we'll start with the Financial Consumer Agency of Canada, Ms. Tedesio and Mr. Biblido.
Mr. Ryan.
And Mr. Ryan. I didn't see you in the corner there, hidden away. Go ahead, Lucy.
Mr. Chair, I can help you with my name.
Yeah.
You pronounce it as you see it, as it is spelled, Tedesco. So
You know,
it's
if you-
Italian and
Lucy, if you talk to those around here, they will tell you I couldn't even pronounce a name properly if I did see it. That's what they'll tell me.
that's not a problem. Well, thank you, Mr. Chair, and good afternoon, everyone. Bonjour à vous tous.
Good afternoon to all of you.
Pleasure for the FCAC to have been invited to speak on its role with respect to bank sales practices. And joining me today is my colleague Richard Bilodeau, who is the Director of Supervision and Promotion, and also responsible is taking the lead for our industry business sales practices review. And to his right, another colleague of mine, Mr. Jeremy Ryan, who is our Director of Financial Literacy and Stakeholder Engagement. So as a federal agency, the FCAC is responsible for protecting the consumers of financial services and products. We deliver on our mandate through two distinct but complementary programs. The first is through the oversight of federal financial entities, and the second is through strengthening the financial literacy of Canadians. These programs allow the agency to contribute to the federal financial oversight framework of promoting public confidence in a strong, stable, and competitive financial system. Nous exerçons notre fonction de surveillance à
We carry out our oversight function through three entities. The first one corresponds to financial institutions under federal charter, banks, credit co-ops, insurance and trust companies, loan companies, which are registered under federal legislation. The second type deals with external complaint institutions, and third, payment card institutions such as Interac, Visa, MasterCard, and American Express.
to ensure compliance with their market conduct obligations under the various federal statutes. External complaint bodies, or ombuds services, as some might call them, are monitored to ensure their compliance with applicable regulations. These organizations are mandated to deal with consumer complaints that are not resolved to the consumer's satisfaction through the financial institution's complaint handling process. All banks must be members of an approved external complaints body. Payment card network operators are overseen by FCAC to ensure that they comply with their obligations and adhere to the commercial practices that are intended to protect merchants. En complément de notre mandat de supervision et de promotion,
In addition to our oversight function, we are in charge of financial literacy for Canadians and to improve their financial well-being by helping them make enlightened decisions responding to their needs.
sales practices. When the Wells Fargo story broke in the U.S. in September of 2016, we immediately conducted an analysis of the complaints we have received during the previous 3 years from consumers alleging they had received financial products or services for which they had neither signed up nor received the required disclosure. What we found at that time was that the number of complaints received with respect to these two issues had remained stable year over year. Nonetheless, we continued to monitor incoming complaints and decided to make bank sales practices related to credit card the subject of our next industry review. Industry reviews are conducted annually to supervise compliance with market conduct obligations and to help us identify emerging trends and issues that may impact consumers of financial services and products. In a letter dated February 3rd, 2017 to the banks, we reminded them of their obligations to provide consumers with the required disclosure and to obtain their express consent when selling financial services and products to them. We also issued a consumer alert on the same day informing consumers that banks must obtain their express consent before they can issue credit cards to them. Then, following media reports alleging questionable sales practices by Canada's big banks, I announced that we would be examining bank sales practices in relation to express consent and disclosure. That was on March 15th, 2017. Depuis, notre équipe chargée de la supervision.
Since then, our team in charge of the enforcement of law has been working hard to look into complaints and to conduct investigations. Team members are looking at all factors which may have led to non-compliance, and they have received the order to take the necessary measures to enforce the law in any case of violation of the law which they might have found.
The broader industry review of bank sales practices, which is now in full swing. Through the review, we are assessing whether sales targets and incentive programs are contributing to sales practices that lead to poor outcomes for consumers. We are doing this by interviewing consumers and speaking to consumer groups to gain a broader understanding of the sales experience from the consumer perspective. We are reviewing the institution's incentive programs, sale targets, and performance management policies, examining their internal controls, and meeting with all relevant bank personnel regardless of their role or level. The initial findings of our review will be made public by the end of 2017. And I want to emphasize that we will thoroughly investigate all breaches of consumer protection that we uncover during this review, and we will enforce compliance with the tools that we have at our disposal. This industry review is an example of FCAC's approach to supervision, which is based on 3 pillars. First, we promote responsible market conduct. Second, we monitor market conduct. And third, we enforce market conduct obligations. Last year, together with the first 4 months of this year, through this very approach, we were able to facilitate the repayment of close to $15 million that was paid by Canadian financial institutions to consumers. So with that, I will conclude my remarks, and thank you for the opportunity to appear before you today. And I and my colleagues look forward to answering any questions you may have.
Thank you very much, Ms. Tedesco. Canadian Bankers Association, Mr. Hanna, Vice President, Finance, Risk and Prudential Policy, and Ms. Stevens, Assistant Legal Counsel. Floor is yours. Welcome. Thank you for coming.
Thank you. I would like to thank the committee for inviting the Canadian Bankers Association to discuss consumer protection in banking. My name is Darren Hanna. I'm the Vice President of Finance, Risk and Prudential Policy, and joining me is my colleague Sandy Stevens, Assistant General Counsel. The Canadian Bankers Association represents 63 domestic banks, foreign bank subsidiaries, and foreign bank branches operating in Canada. Banks help families buy a home and save for retirement, help small businesses grow and thrive, and help drive the economy. Banks provide over half of all the business lending in Canada. Canada's banks are prudent lenders and continually work to make credit available to creditworthy Canadians and businesses in Canada. Banks are in the business of customer service business with a history of building long-standing relationships with their clients. A key part of developing that relationship is providing advice about products and services to help customers realize their financial goals and respecting customers' right to freely choose their financial products and services. And with more than 40 banks offering financial products and services, in addition to hundreds of credit unions and Caisse Populaire, customers know that they are in the driver's seat when it comes to choice. With that in mind, bank employees receive training and information on principles for putting the client first. Banks work hard to provide the services and products that are right for their customers, and this means they have to keep their customers' needs and interests in mind, providing the information they need to make informed decisions when choosing financial products and services. Banks have a strong track record of following both the letter and the spirit of the law in dealing with customers. Banks devote considerable time, effort, and resources to ensuring strong compliance. They take extensive steps to make sure that customers subscribe to the products and services they want and to which they have consented to receive. Banks have clear guidelines, policies, and procedures to ensure products are described accurately and completely to their clients. Banks also have established codes of conduct that articulate employee behavior, including expectations related to integrity in sales practices. All employees are required to attest to compliance with the code of conduct on an annual basis. Should an employee not adhere to a bank's code of conduct, banks take corrective action to address employee behavior. Bank performance management systems and incentives are designed to reinforce appropriate practices and culture that promote a client-centric, advice-driven approach. Performance management systems include several layers of controls, governance, and oversight to ensure appropriate conduct and to detect and address potential incidents of inappropriate behavior. A key factor in the goal-setting process for employees is that sales objectives are designed to align with creating value for customers, and that objectives are reasonably obtainable and aligned across products and channels. Customers are well served by their banks. As I've already mentioned, banks work hard to meet the needs of their customers, and banks are competing with each other to attract and retain customers. Canadians appreciate the reliability, trustworthiness, and stability of Canada's banks. No less important is the value that customers feel they get from their bank. Banks have worked hard to make banking more convenient, extending branch hours, introducing mobile banking and payments, and enhancing online banking, enabling banking literally around the clock and around the world. Canadians have noticed and value these improvements. A key part of customer satisfaction is how banks respond to complaints. Should a bank customer have a complaint, banks have a very robust and thorough internal complaint process. In fact, very few complaints are not resolved within the bank. In those cases, complaints are reviewed by an independent ombudsman, and in 2016, only 515 complaints were reviewed by external complaints bodies. With more than 9 billion customer transactions flowing through banks each year from millions of customers, the small number of complaints demonstrates a positive customer experience across all banks. Finally, I want to briefly comment on banks' relationship with our regulators. We work closely with the FCAC and OSFI on consumer and prudential matters, respectively. Canada's streamlined and effective financial regulatory system has become a model for the world, providing strong federal consumer and prudential regulatory regime in which banks operate. Specifically on consumer regulations, banks cooperate with the FCAC to ensure compliance with those regulations, including express consent and disclosure. As you've heard, the FCAC regularly conducts reviews of banks' business practices, and banks cooperate with them on those reviews. Thank you again for the opportunity to present our views, and I look forward to your questions.
Thank you very much to all the witnesses. The first round will go to 7 minutes. Mr. Fergus, you're first up.
Bon, mais merci beaucoup d'être venu.
Thank you very much for being here. Thank you, Mr. Hanna, Ms. Tedesco, and your colleagues. My question, to begin with, is for Mr. Hanna. We heard and we read in the newspaper complaints filed by former employees of the major banks with regard to their practices, with a view not to obtain consent, but at least enlightened consent. Your members, the major banks in Canada, are they taking this very seriously in your view, these complaints that have been made? Do you believe that there's a problem? Is there a prima facie conclusion that there's something there, or do you think it's a misunderstanding on the part of customers?
Banks certainly take the allegations very seriously, and I think they've all stated that very much publicly. And they've also stated, and I think it's also the case, that it is certainly not consistent with their own expectations of culture or their own views about the culture or the operations of their institutions. And indeed, they look seriously at the issue to make sure that they are promoting a culture that is customer-centric. Banking is really a relationship business. You want to establish, build, and sustain a strong, lasting relationship with your clients, and you will need engaged employees and motivated employees to do that. And ultimately that's very important.
I'm sorry, and please continue, please, for the other parts of the question.
I'm sorry, which part?
Are they convinced that there's a prima facie case that these complaints are legitimate, or is there a sense that this is a misunderstanding?
I think what they have said is that this is inconsistent with their own expectations or their own internal reviews around their institutions, both from a customer perspective and a client perspective, and I'm certain they can provide additional information around that when they come forward.
Sorry to dig just a little bit further on that one, but again, I can understand how it might not correspond with their expectations, and I'd like to actually explore that term expectations, les attentes. Are we talking about their own expectations, or are we also talking about their own codes of conduct in regard to sales practices of their products?
Sure. Maybe I think there's a linkage here, and maybe it's best to explain it in the context of a system. A bank always starts from culture. You want to have a strong culture. The culture articulates what you are trying to build as an organization, how you want your employees to behave, how you want the client relationship to look, and how you want the client to feel. You build that then into the code of conduct. The code of conduct should articulate what that relationship should look like and what sort of values you want to embody within the organization. That then gets translated into the actions and the directions for the employees. It all flows through, and then you monitor performance against that.
So I'm assuming that all Schedule I banks have codes of conduct regarding the sales practices?
They certainly all have codes of conduct for their employees.
Okay. All right, so we could dig a little deeper on that one, but I guess we could address that with each one of the Schedule I. Is there a gap, or has it come to the attention of your membership that there is a gap in terms of having a code of conduct specifically in reference to the sales practices?
Yeah, the code of conduct is designed, and indeed the objectives for each employee are designed to be multifaceted. You're going to look at several dimensions because ultimately culture is a very sort of rich concept. You have to look at a number of dimensions of culture. Sales may be part of that, but there's also going to be clearly consumer feedback, making sure that the client feedback is incorporated into your objectives, making sure other factors are as well. These are growing, robust businesses. You're looking at issues around potentially staff leadership, mentorship, community engagement. It really depends on the position you've got, but you're ultimately trying to bring together a number of dimensions that help reinforce the culture you're trying to build and embody that in the relationship you've got with your staff.
Could I just follow on with that? At a bank, there's multiple controls that relate to performance management. The code is one, but there's a varied number of controls, whether it's training, whether it's coaching. So that's just one control.
Before a long time ago, before I was in politics, I've been in politics for a very long time, I should say, but a long time ago I used to be involved with industry association for research-based pharmaceutical products, and we had set up not only a code of conduct, which of course could be big or thick, but we also set up, which I thought was quite innovative, was the notion of guiding principles, which is very, very thin, sort of like your 10 commandments, of what practices that you would want to encourage, or what are the basic principles by which you would work. Do any of your members have those kind of guiding principles?
That's a question you should ask them. I can't speak to that specifically.
Okay. Does your association, does the CBA encourage their members to develop, or has it ever made that distinction between guiding principles and the code of conduct?
We don't typically get into the code of conduct that the institutions have, but I can certainly say that they can certainly provide them insights into how they structure their codes.
Madame Tedesco, merci beaucoup. J'aimerais juste
Madam Tedesco, thank you very much. I would just like to define your responsibility within the agency. I know that the agency will regulate or supervise its codes of conduct, codes of ethics for financial institutions, the voluntary codes developed by the industry itself. If the financial industry or the major banks identify a gap in this context, and if it develops guiding principles or code of ethics, then will that automatically fall under your responsibility to ensure that they are following, respecting their code? I believe that there are two things here at play. The first thing are cases of behavior that the financial institutions adhere to. So these are codes of conduct that will frame or govern their behavior with regard to certain aspects. So, for example, the credit and debit card code. So there are codes that financial institutions adhere to. There are also codes of conduct in-house within financial institutions. And these codes of conduct that employees adhere to, well, we have no supervisory power over them. But with regard to the codes adhered to by the members of the industry, and there are several of them, we do have a supervisory authority or power over those codes. Thank you.
Mr. Albas.
Thank you, Mr. Chair, and thank you to all of our witnesses. It's a pleasure to have you here today. I'm going to direct my comments mainly at the FCAC. First of all, have you watched the CBC Marketplace episode where these issues were first raised?
When they were first raised, yes, I have. Yes, I have. I was out of the country, but yes, I
Okay,
when I got back, I did.
what was your initial response?
So, if I can just go back a moment in time, when in September the Wells Fargo issue made its way into the media, we took various actions, and I mentioned those in my opening statement. And as soon as the story broke on the CBC, we were getting ready to do our industry review anyway, but we decided to bring it forward because actually some of our complaints, there was an uptick in our complaints, probably because of the media surrounding Wells Fargo and the Go Public media coverage as well. And what I did is I contacted at that particular point in time all of the bank CEOs, the big six CEOs, to let them know that we were going to conduct an industry review to look at their sales practices, and that the industry review could result in investigations and enforcement actions, and that I expected their cooperation and their assistance in helping with our industry review.
Okay, so again, when you saw it, you immediately contacted the CEOs of the banks and informed them that there was considerable interest in this area and that you expect their cooperation. That's fine. But in terms of the public, if someone was to say and to watch it, they would say there's obviously something has gone wrong. Can you please identify what that would be? Is it a lack of oversight? Is it a lack of resources? Is there a gap in the system? Why? How did these practices, given the fact that we do, I would say Canadians, Mr. Chair, would say that they have a very well-governed banking system. Mm-hmm. But how did this arise, in your opinion?
Well, right now, what we're doing is we're doing an industry review precisely to find out, one, if there's a problem, because quite frankly, we haven't done any investigations in this regard, and our industry review was launched the April 1st. So we need to satisfy ourselves that there actually is a problem, and we need to satisfy it through the tools that we have at our disposal.
Is there a venue right now, because again, being more consumer-driven, do you have the mechanism to properly be able to take the former employees or current employees, I'm not sure, for these concerns to be raised, to be investigated fully? Do you have all the authority that you need to be able to do that?
I'm not sure I'm getting the employees.
So there's a
involvement.
difference between a consumer phoning up and saying,
Yes.
I've had an issue,
Yes.
the ombudsperson has not been able to rectify, I would like to raise my concern, versus an employee or former employee that says, these are the practices that were going on
Right.
in my department. Do you have all the tools and resources necessary to carry out an investigation?
I would say that through our industry review, part of our industry review will be to interview all of the employees, all of the relevant employees at all levels, and regardless of their title. And it will help us conduct our investigations. We will have to look at their compensation programs, because the issue for us, for our industry review, is really trying to zero in on whether or not compensation programs and compensation programs and sales targets lead to poor business practices. And we are lucky enough to have worked with some international jurisdictions who have conducted such reviews and have found, whose findings have been that sales targets, and particularly the compensations, drives culture and can drive to poor sales practices and poor outcomes for consumers.
So I do appreciate the response, because I think we're starting to get more on where, again, the cusp of the issue, or when we try to pin the tail on the donkey, so to speak, here as to where things are. But I asked you a very specific question. Do you have the resources and the tools necessary to carry out an investigation that would bring these things to light right now?
I would say that, yes, we are currently buttressing our supervision bench strength by creating a new enforcement unit. And additionally, we are adding resources to our supervision group. By the end of next year, we will have added 10 more resources to help with our supervision group. And through our industry reviews, and through this particular industry review, we will be able to look at things like compensation programs. Someone made the point, whether middle management is, if there's a corporate culture and if there's a governance culture and all the policies and procedures are in place, what falls off? We will be able to look at that. We will be able to look at how employees are managed, how their performance is managed. What if they don't reach their sales targets? What happens to them? Those kinds of things, those kinds of matters that might lead to some poor behavior. Did you want to add anything, Richard?
Time for a short one.
I was going to add simply that as part of looking at the complaints that we received, any information that we received from employees will be followed up on.
Thank you. Thank you, Mr. Chair.
That, just if I could, Pierre, on that, because that was my question. Could you tell me the process that you would use in this type of an investigation, and how do you handle a specific employee complaint that we've seen in the media? I mean, I debate myself. Is it your area? Is it the Canadian Labour Code? Is it a provincial matter under their Labour Code? But how do you? It's one thing for you folks, I think, to handle a consumer complaint, but how do you involve yourself in an employee complaint?
So I think it's very important to be clear on this point, and your question is very relevant. We do not have the ability, nor is it our mandate, to get involved in an employee-employer dispute or issue. It's not our role, and we have no desire to play that role. However, if an employee has information and that information comes to us, that's a source of information to us that we can use to inform ourselves, whether it's an investigation or industry review, about what's going on. But we do not have that mandate. It's really just a source of information.
Okay, thank you, Mr. Dussault.
Merci, Monsieur le Président. Et ma première question.
Thank you, Mr. Chairman. My first question is for Mr. Hanna. Unfortunately, it would seem that you have virtually denied that a problem exists, despite the numerous reports that we've seen, what we saw in the news and what we ourselves receive. And I'm sure that it's the same thing for my other colleagues around the table. Former employees and bank customers have complained, and in their minds, the problem clearly does exist. So I'm somewhat surprised to hear you set this aside at the outset. But I would like to dwell on your expertise with regard to the objectives set by the bank, the sales targets that are imposed upon employees. Is this a practice that is real? And to what extent must employees fulfill these targets set by their employer, by the banks?
Ed, ultimately, what the bank is trying to do is set objectives that align with the culture that the institution is trying to put forward and is trying to build and trying to strengthen. The culture is one centered on building and strengthening a robust client relationship, and that's a many-dimensional issue. If for clients that have a sales function, there's a sales element to that, but that won't be it. That might be one dimension. Customer feedback, client feedback, that'll certainly be another dimension. Potentially other issues around, say, leadership, mentorship, training, potentially community involvement, civic involvement. All of these are factors that build towards an objective of creating a culture that is one that is designed to both strengthen and extend the client relationship and ensure clients are satisfied and that they want to maintain, enhance, and deepen and extend their relationship with your financial institution, because banking is ultimately a relationship business. It's not a single transaction business. It is trying to build, extend, and create a long-lived relationship with the client that has many dimensions to it.
Merci. Probablement qu'on peut rajouter ici le désir.
We could probably add here the desire to make a profit. It counts among the objectives of a bank. When you're selling a product, there's that dimension as well. As you stated, you want to serve your consumers well, but I don't think we can neglect the profit aspect that ties in with this in the case of the major banks. That being said, are you aware of any disciplinary measures that might be taken against employees who don't reach the targets? And do you think that this is a practice that's appropriate? If, for example, you put names of employees on a list, a blacklist, if they don't reach the targets, if they're not performing the way you want them to? Or are they perhaps placed in a subcategory of employees, underperformers? And once they're in that category, well, they've got a gun to their heads. And it comes down to telling them, listen, if you don't perform the way you should be, you'll be let go. Are you aware of such practices? Do you have employees who face sanctions, pressures, penalties when they don't reach the targets? Do you think this is a problem?
Employee relationships, but I can certainly say that from the institution's point of view, if you're trying to build a culture that's focused around the client, you also have to make sure that the employees feel properly engaged. And you want to have motivated employees to make sure that this works, and engaged employees. Banks typically have very high employee engagement scores, which is a good thing, and because that's part of it. Ultimately, banking is very much, in that sense, a very personal business. You have staff who are dealing with clients. You want to make sure the client is comfortable. You want to make sure the client is well served. To have that, you have to have an employee who's comfortable, an employee who feels engaged and empowered. That's really important.
Merci. C'est pas nécessairement ce qu'on entend.
Thank you. That's not necessarily what we've been hearing through the reports we've been getting. Some people have said that these incentives are such, and there was someone who told me, well, he was talking to his colleague at the next desk, and he said, how do you go about reaching your objectives, your targets? And he answered, well, sometimes I give customers products that they haven't even asked me for. I falsify their signatures. I increase the interest rates and their line of credit limits, etc., without their authorization. These are real statements that we've received. The numbers are there. Some people indulge in such practices because of the targets imposed upon them. Unfortunately, you haven't addressed this issue today. Apart from that, with the time I have left, what recourses are there available to customers and to people who are witnesses of these situations, employees who are witnesses to this? I understand there's a complaint, a process that can go all the way to penalties. What types of penalties have been meted out over the last few years that might perhaps give us an idea of the breadth of the problem we're facing? So that's my first question. Over the last few years, what penalties, what fines, sanctions have been imposed? I'll answer your question in a general way, because I don't think we can say that for this issue we've had these penalties handed down. For 2016-17, we received 3 decisions from the Commissioner that were delivered by the Commissioner. Among the 3, there were 8 violations that were documented for a total of 464 fines. But that's just part of the story. As the Commissioner mentioned, over the last year, we obtained reimbursements to customers working via the various tools that we have, etc., a total of $15 million. This is money that was repaid because of customers who were overburdened, etc. We were able to seek out these reimbursements using the tools at our disposal. And it's not just the monetary aspect, but if customers perhaps got the wrong information from their financial institution, we succeeded in obtaining corrections, going back in time so that corrections were provided to the customers of these banks, because that too is important. It's not because there were no financial losses that the customer didn't incur other types of losses or inconveniences. So when the wrong information is provided, it has to be corrected. That's good news, the $15 million, giving it back to consumers. But I think we could be stricter with the banks. And my question tying in with this would be the following. When you hand down sanctions, penalties, fines, when you conclude an investigation and you find against a bank, is this information made public? Because one of the ways of discouraging banks, to my mind, is to name them when they are at fault. Is that your way of operating? If not, would that be a solution? I could begin by explaining the process, and then the Commissioner might explain further. We have a process in place when there's a report of a violation, when there are financial penalties imposed. The bank can appear before the Commissioner, who then renders a decision. We have principles with regard to publication. We publish all of the Commissioner's decisions. Now, these decisions can or not identify the financial institution at fault. That can be discussed. But the issues leading to the violation, if there's a fine that's imposed, well, the amount is also announced in the decision that's published. And what wouldn't be divulged is sensitive commercial trade information. Obviously, that would be excluded for reasons that are obvious. But we want to inform consumers, but we also want to use this in order to inform and alert other financial institutions so that they're fully aware of their obligations.
Do you want to add? We're over your time, Pierre. Go ahead, Lucy.
Oh, okay. Thank you. If I can I'm more familiar with the wording in English, so if you'll allow me to speak English. We are under our act. The commissioner has the authority to publish or not publish the name of the institution, the nature of the violation, and any penalty that is imposed. And that's a very important aspect of FCAC's flexible approach to encouraging and enforcing compliance and changing institutional behavior. And I think that's precisely what's contemplated by our act, is to bring the institutions back into compliance and change their behavior while obtaining the best potential outcome for consumers. Our regime is not a punitive one. So when I am looking whether to name or not name an institution, I have to look at each case on its own merits individually. And I look at things, I consider factors such as the egregiousness of the actions of the institution. I look at its willingness to take responsibility for its actions, whether the deterrent impact that naming might have, the impact it can have as well on consumers and consumer confidence, the level of collaboration and cooperation during the investigative process, and also the institution's commitment to take any and all actions to prevent any future breaches and correct the ones that they've already committed. And I would say that notices of violations and decisions and the discretion afforded by Section 31 are only really part of the picture, because when I'm deciding whether or not to name an institution, I am looking for what exactly will change the behavior of the institution, what will bring it into compliance, and also, more importantly, will the best outcome for consumers result from the naming? And that involves reimbursement to consumers.
Okay, we'll have to leave it there. We're well over time. Ms. O'Connell.
Thank you, Mr. Chair. Thank you all for being here. I have several questions, so I'm going to somewhat get right to it. But for me, I think the big elephant in the room of what we haven't talked about, and some of the information in a lot of the media reports that came out, were in regards to sales tactics around mutual funds, which I know is not part of the FCAC's oversight. However, I'm wondering if there is a significant gap in your oversight. Perhaps when these offices are established and the distribution of oversight, you know, I remember not that long ago when you wanted to make investments, it wasn't always through your bank. It was somewhat of a separate investment institution. But now, when the two are so uniquely commingled, and you go in and want to sign up for a credit card or do your regular banking, and Mr. Hanna, you talked about that banks are in the relationship business. You said that several times. I can speak to that in my community. I know my bankers and the people I've dealt with for almost my entire life. So when you are in that business of building relationships and you go in and then all of a sudden, hey, I see you have a lot of money in this savings account, which would be regulated under FCAC and any sales tactics. But if you now move this into an investment portfolio that we also now manage as the bank, and if you do that, you're no longer regulated by the FCAC or that oversight. And it's my understanding the Canadian Securities Administrators, they oversee each provincial securities regulator. And it's my understanding, in doing some research and media reports, in 2013, the Canadian Securities Administrators were saying this is a concern. sales practices around mutual funds. The question of advisor, spelled with an E or an O, actually has a great difference to consumers. And we talk about literacy. So is part of this, or for me, the missing piece, the fact that banks have a completely different financial services packages now than perhaps when the oversight was first established? And is there not a large gap in terms of oversight and regulations to start bringing some of these provincial, territorial oversight groups together and actually have the FCAC look at sales techniques within the four walls of the banks and stop having them all in silos?
Well, I can answer that. Thank you for your question. Typically, any mutual funds, securities are handled by a different arm of the bank, which is provincially regulated. And so it's very difficult. They're separate corporate entities, and we don't have, plainly speaking, we don't have jurisdiction over that business. It's clearly provincial jurisdiction. And provinces do have investor education programs, and they try to, as we do, they try to educate consumers on the risks and on the pros and cons of certain products, investment products.
With that being said, if this committee, and this is the first day of testimony, of course, but if this committee sees a consistent theme that as customers, clients of banks are walking into banks for some other product or service and are being consistently moved into the mutual fund, investment, securities, and they might be legally separate entities. However, again, they're within the four walls of the bank. This committee will essentially potentially make recommendations in terms of what needs to be done moving forward, even if that is a collaboration with provincial entities. Do you not see the need for, especially with consumer literacy, if the FCAC doesn't really regulate or oversee all actions within the bank, then is there not an ability, or should it be a recommendation to really work towards a centralized kind of oversight within the four walls of those banks?
Well, that might raise some constitutional issues, and unfortunately, we don't debate constitutional issues at the FCAC. We leave those questions to the constitutional law experts. That's really all I can say on that question.
Fair enough, but we also have the voluntary I guess, codes, thank you, codes of conduct. So, because yes, I'm not suggesting constitutional overstepping. However, there has to be this kind of, there has to be this consumer level playing field. And if banks volunteer for best practices because it's in their best interest, if they truly care about relationship businesses, then could this not be part of the conversation for those voluntary codes of conduct?
Well, perhaps, but I would submit to you that the securities arms of the financial institutions are well regulated by the provinces, and if there are issues regarding investment or investor fraud and those kinds of things, they would look after that.
Thank you. Do I have time for one more?
You do, a short one.
I wanted to speak about actually literacy. And I'm just wondering, in terms of consumer literacy, if it is being done, or what is the role of the FCAC in actually providing it, or do you rely on the banks themselves? I can tell you I never received a single course in elementary school, high school, or university about financial literacy. So if it's being left up to the institutions themselves, is it getting out there, or what should be done?
Thank you for your question. I'll just start and let my colleague follow up. I can tell you that we have a mandate to strengthen the financial literacy of Canadians, and we do that through our financial literacy leader, Jane Rooney, who was appointed for that sole purpose, to develop a national strategy for financial literacy. The strategy has goals and helps focus the work of those who are also involved in strengthening the financial literacy of Canadians to help them target populations such as the youth, children and youth, the adults and seniors. There's also a separate strategy for financial literacy for seniors. And some of the priority populations that the strategy is targeting are vulnerable populations. And I'll let Jeremy kind of follow up.
Sure. There is some good news on the education front at the school level. You mentioned not receiving any training or financial literacy training. Over the past few months, there have been some great announcements. Both Ontario and Quebec have announced that financial literacy will be mandatory. So that's good news for us. I should also state that in 2007, when FCAC's consumer education mandate was expanded, it was to look at the financial literacy of young Canadians. And as such, we partnered with the province of British Columbia to develop a youth educational resource called the City Financial Life Skills that is being taught throughout the country right now in all provinces at different levels. So some will be compulsory courses, others will be elective. But the provinces have really come on board and are developing their own resources as well. As Lucy mentioned, we do work with a number of stakeholders across the country. I mentioned earlier the 13 financial literacy networks that represent 532 organizations that work with various audiences. So Indigenous peoples in Canada, newcomers to Canada, seniors, low income, people living with disabilities. And so we develop initiatives, workshops, material, and then we disseminate it through the networks.
Sorry, just to clarify, did you say that program was City Financial, as in sponsor?
No, the City Financial Life Skills.
Okay,
yes, not the financial institution.
Okay, thank you.
Okay, thank you both, Mr. Genero, and we're 5 minutes round, or 5 minute round.
Merci, Monsieur le Président. Madame Tedesco.
Thank you, Mr. Chair. Ms. Tedesco, I just want to make sure I understand. A little earlier, we were talking about 15 million. That was the answer, but I thought last year was 50 million that were reimbursed. Is that the wrong number? It was closer to 15 million. So that money was sent back to consumers?
So if you could give us a number.
I thought I had answered. Sorry, yeah, it is close to 15 million.
15 million, okay. Yeah. Ces montants-là sont...
So, what kind of reimbursement was made to consumers? How was it given back to them? Were these fees that, was this an overcharging of fees? It could have been fees which were charged. It could have been interest. In fact, it's anything the consumer should have paid. We assess the difference, and in fact, we reimburse that difference. Does this come after investigations, the 15 million? So how many people were reimbursed? Tens of thousands of people? Thousands? Well, I can't really answer that question because in some cases there may not have been financial losses. I can't give you a specific number. However, I can say that on average, 1.5 million accounts were affected. It's not 1.5 million people necessarily, but those were the accounts. Ms. Tedesco, in your current review, now clearly you're not a tribunal, so... But can you impose financial penalties, not only financial penalties, but other ones on the banks? CBC a couple of days ago came out with a report saying that at least 130 cases of falsification of signatures which were discovered. So based on the CBC investigation, it seems that the number of falsified signatures has been completely underestimated. So how How much investigation can you do, Ms. Tedesco? How deep can you dig? How far can you go in your investigations? Well, we are going to conduct our review, and if we discover violations of the law, we'll investigate further, and we'll do what it takes, including imposing penalties against the financial institutions. I have that right as commissioner, so my team will conduct the investigation, will give its report to the assistant commissioner, who will emit a report of violations, will notify a bank or the banks of violations based on reasonable grounds, and can impose sanctions. When is this report going to come out, and will it be made public? The report will be made public by the end of the year, more towards the end of the year. However, as the investigation unfolds, if we discover that there have been violations, we can immediately investigate. And will that be made public eventually, the investigations? Yes, they will be made public based on our publication rules. Mr. Hanna, if I may, as opposed to the NDP, I have no objection to banks making money. I'm a businessman. Businesses have to make money. They need to reinvest their profits. But where I have a problem is that when the banks become too greedy, when they actually falsify signatures, when they ask employees or managers to falsify signatures in order to impose fees, which, of course, go to the bank's profits, I have a problem with that. Now, you gave a presentation today, and I agree with Mr. Dussault. I don't quite see that you get the scope, the importance of this problem. People who have investigated so far will keep on digging. So I imagine you've got to take this whole issue seriously. Canada cannot allow banks to ruin their own customers. Not only would these practices affect the banks, but these practices would affect the entire banking system. So I really hope that your members take the bull by the horns to make sure that this never happens again. It's unacceptable. What do you say to that?
Allegations of the type that you've described extremely seriously and clearly want to investigate them, and indeed welcome the review by the FCAC, because we do not believe that what has been articulated is consistent with either the culture or the practice that the institutions have in place. But certainly, any type of allegation of that type is something they're going to take very seriously.
Thank you both. Just on this point of falsifying signatures, because I had a former bank manager write me this morning, what is the penalty for falsifying signatures in most? I expect it to be the same in them all. Is it firing?
I'm sorry, that's something you'd have to ask each of the institutions. But clearly, it's going to be incredibly serious.
Yes, it was for this fellow anyway, because he fired a few people over it. But just a point of clarification, the number of accounts that were affected, we're having a discussion here whether you said 1.5 million or 1.5 thousand?
Approximately 1.5 million.
1.5 million. Okay, thank you. That clears that up. Mr. Sabera.
Thank you, Mr. Chair. Welcome, everybody. First question, if I can try to keep this as short as possible. The literacy part, which I think is actually a very, very big component of FCAC, and I believe the month of November is Financial Literacy Month, but I think it should be all year round. Is FCAC working with, in my province, the province of Ontario, which was announced in March, that in fall of 2018 that all high school students will have to take financial literacy. Are there any synergies? Are you working with the province of Ontario on that?
I know that prior to the naming of the financial literacy leader, I worked and approached the province of Ontario, and Jane Rooney, our financial literacy leader, has spent much time and effort and energy with the government of Ontario. And I'd like to think that we have had an influence on the government making financial education compulsory. So we've worked with all the provinces, and we've certainly worked with Ontario and the Minister of Education of Ontario specifically.
A few years ago, the government of Ontario actually undertook some consultations with Ontarians to look at how to embed financial literacy into curricula. And so we invited the financial literacy leader at FCAC to speak about the importance of building financial literacy of young Canadians.
If you can stop there, because I only have 5 minutes, I have a lot to say. Going through the presentation that was provided, there are a little bit of quirks in terms of you have oversight of debt collection practices, but you don't have oversight of the credit reporting agencies. This kind of seems a little bit strange to me, but it's one of those things. Within the mandate, one of the pillars of your mandate is monitor and evaluate trends and emerging issues that may affect consumers of financial products and services. Do you think you have the I want to say the capacity, resources, and maybe even capability with what is going on in the financial services sector, call it banking, fintech, to stay on top of sales practices that are impacting consumers?
So thank you for your question. As I mentioned, when I joined the agency, I think we were, how many people were we? We were, I think, close to 75 people. And by the end of next year, we should be 104. So we have been ramping up and reassessing our needs as we get additional bench strength. So there's no question that right now, we are putting our best efforts forward to keep pace with the evolving and the evolution and the changes in the financial sector.
Okay, because I think the direction is, my personal view, is a correct one. Even the voluntary codes of conduct on interchange for merchants and debit and mortgage repayment, I think that's the way to go rather than legislating everything. I just want to ensure that the resources are there to sufficiently ensure that consumers are protected. I'm going to go to the CBA now because I don't want to let you off the hook, to be frank. I worked at a financial institution for many years, both here in Canada and the United States. They employ tens of thousands of people, and they do a great job for the most part. Sometimes they don't. And I want to make sure that the sales practices that are put in place, that there may be some overzealousness, that the practices that could lead to Canadians being put at risk, but also the financial system in certain pockets being put at risk. Whether it's forgery of documents, whether it's providing credit cards or any sort of credit, unsecured or secured, to Canadians that maybe not being able to afford it. For me, that is very important, because of that, in a downturn in the economy or so forth, the repercussions may be significant. So my comment more so is the industry association working with the Schedule I banks, putting in place measures to ensure that what we saw on CBC or Marketplace or whatever you want to see does not reoccur.
Certainly, everyone's taking these allegations seriously. There's no doubt about that. Everyone is concerned about them. But it's also true that I think institutions are certainly looking within their own practices to make sure and satisfy themselves that their systems are robust and that they are incenting the appropriate behaviors to build the culture that they want to build. And
because there's nothing incompatible with having targets, sales target. Every corporate organization has it. That is, that's the private sector. Sales targets, having sales targets, and having proper sales practices. And we need to ensure that the two are blended together or melded together properly. And if some way it goes off track on the right-hand side right now in the sales practices, that's corrected, and that measures are put in place to ensure that does not happen again. Now, those measures can be voluntary measures in terms of the organizations in place, or feasibly, they could be legislative measures, if that's, you know.
You have the
So I'll
floor.
leave it there.
Sure. It ties in with something that I said earlier. The intent is always to try to set the incentives in a multidimensional way so that the incentives ultimately incent you to move towards the culture that the organization is trying to create. And it is exactly along the lines that you've just described. You want to make sure that ultimately what comes out of this is a client experience where the client feels that they are getting the appropriate product, the appropriate service, and feels that they're actually getting value from the relationship and they want to extend the relationship. And that's exactly as you've described. You need to then balance out a series of different dimensions in whatever objectives you set for your employee so it ultimately travels towards that direction. Then you need to set up monitoring to ensure that the behavior aligns and enforces the culture and reinforces the culture they're trying to build.
Mr. Leipert and then Mr. Graywell. Mr. Leipert.
Thank you, Chair. I think most of the questions that have been asked of our guests, I do have some concerns about some of the comments that may have been made as part of the questions. There's been questions that have been asked that have been along the lines of these incidents did happen. And I think we have to be careful because we haven't heard our testimony yet from those who have been directly involved in it. So I look forward to that opportunity in our other sessions. I'm sitting here listening to the conversation and the work that the Ms. Tedesco's organization is doing, and I'm wondering if we're adding any value since they're already seem to have been launched into a pretty significant investigation. So I guess we'll see what some of the other testimony comes when the banks and the individuals appear before us here. But it seems to me that it might have been actually more beneficial to wait until the review has been done, because quite honestly, that's exactly what the Financial Consumer Agency of Canada set up to do, and here we seem to be doing the same thing all over again. So I guess with those couple of comments, I would just give my remaining time to my colleague, Mr. Albus. Thank you.
Mr. Albus.
Thank you very much, Mr. Chair. Just quickly, Ms. Tedesco, you said earlier that you've launched an investigation. That's ongoing. Do you have an idea of approximately when you might come to a conclusion of that process?
Richard, did you want to answer that, because he's leading the exercise? We will have initial findings by the end of this year, but our work will be in phases. We have 2 streams, and one of the streams has 2 phases, and the second phase, I believe, will be completed by June 2018.
Okay, so just on the topic of the investigation and how it's going to be reported. Will it be reported on a case-by-case basis, or will it be more of a generalized report? Will it be something that you will be giving to the Minister of Finance and Finance Canada for their review prior to the Bank Act review? Or is there some sort of public mechanism? Because I would like just to know how the information that your team will gather and its conclusions will ultimately be, will it go back to the government quietly, or is there going to be a very public reporting mechanism?
We intend to publish our findings.
If I could just speak to the investigation part of your question, it's very important to note that the industry review itself of bank sales practices, their impact on employees' interactions with consumers in regards to express consent is one thing. Any investigations happening either as a result of our work there or separately, because we have received complaints, we've asked information from the banks. Any investigations coming out of that is separate from their review and will be dealt with separately. So as those investigations progress, we will follow our normal procedure. I can assure you that it is a priority for the agency and for my group to investigate those, and we will publish decisions, according to our publishing principles. As a matter of course, that activity is separate, and they don't go through the Minister of Finance or the Department of Finance. It's entirely done within the agency.
Okay, thank you for clarifying. Thank you.
Thank you as well. Just further on that point, a number of the letters that I've received relate to an employee who may have went to their human resource sections, thinks they were dealt with unfairly, and that's not your area of jurisdiction, I don't believe. So where do those folks go who have a complaint in the system, and sometimes it's personal relationships, I understand that, and sometimes it's fact. But where how do we deal with those folks? And like I said earlier, we're kind of in a quagmire here because there's some things provincial, there's some federal labor law, provincial labor law, banking practices and their rights, but individual rights of employees who feel they've been wrong that can't find a recourse for how they've been wronged. And I can tell you some of those letters are fairly strenuous in their point of view, where they feel now they're in the healthcare system because how they were treated at work. So does anyone have any suggestions where those individuals can go to get recourse? None.
Andy, do you want to walk through the employee recourse system?
Sure. Within a bank, there's a myriad of ways for an employee to escalate a concern. They can go to their direct manager, they can go to HR, but they also have an internal ombudsman system, which is independent and can look at their complaint. Also, we're federally regulated institutions, so we're under the labor code, and in certain instances, there is a complaint mechanism under that code as well.
Okay, that's good information. Thank you, Mr. Dussault. One quick question, and then we'll go to the other side, Mr. Graywell.
Oui, ben peut-être entendre. Je voulais savoir votre commentaire.
I'd just like to know what the FCAC thinks of sales objective, sales targets, which seems to be a thing within the banking sector, and whether consumers are well served by such an incentive system, performance incentive system. The more you sell to consumers, the more you make. Do you think this is a good way of helping Canadian consumers to have this kind of practice at the banks, which are trying to sell more, and ever more of products and services, even if consumers might not need those products and services? Well, we have the chance of having international colleagues who have already conducted reviews into similar issues, and they found, following their investigations, that incentive programs based on sales targets versus looking after the best interest of consumers, that the first type of practice, the sales targets, did not yield good results for consumers. They also discovered that these incentivization programs, and Mr. Hanna mentioned the culture of some institutions. So our colleagues elsewhere found that these incentivization programs were part and parcel of the culture of an organization because it indicated which behaviors were appreciated, if you will, by the institutions themselves. So this finding held true internationally, and in addition to this, governance was lacking, controls were lacking as well, and that there was a lack of regulation.
Last round of questions, Mr. Graywell.
Thank you, Mr. Chair. Thank you to the witnesses for testifying today. Ms. Tedesco, is that correct?
Yes.
You mentioned after what happened at Wells Fargo that you guys did a proactive research on what are the sales techniques being done by Canadian banks. Involved in that report, did you guys actually go to the branch level and witness how a customer comes into the branch and the interactions a customer may have with a customer service rep, or better known as a teller?
So if I said that, I misspoke.
No, I'm asking, was that part of your report?
At this point, there is no report.
No, this was in the response to the testimony you gave on what happened after Wells Fargo.
Yes.
Right? You said that you guys looked at your current sales practices.
No, so what we did is we looked at our complaints in the same area.
Okay.
So complaints in the areas of express consent and disclosure. And we went back 3 years to see what they looked like. And what we determined was that the number remained stable year over year. But even despite the fact that there was no red flag, if you will, from our complaints perspective, we continued to monitor incoming complaints, and we decided to focus our next industry review on sales practices to gather more information about sales practices, because we knew what was going on in the United States. We wanted to find out what was going on in Canada. So we decided to
As part of your report now, will that include somebody going into a bank and having interactions with customer service representatives?
So we are definitely going to do some mystery shopping type exercise, but
Perfect.
I can let Richard.
That's fine. I just wanted to make sure it was included,
Okay.
because of my experience as a customer of one of the big banks is that every time I go in, and if I go to various different branches, I'm always being told, oh, why don't you buy the unlimited thing? Oh, what are you going to do with this balance in your account? You should invest it in mutual funds, right?
Yes.
And that's all well and good, because banks are profit driven. And I want to say that we're not picking on the banks here. We're saying is that, at a certain point, what happens is that they're taking advantage of vulnerable Canadians that do not have the financial literacy to make these decisions, especially when something like banking comes up. Banking happens on a weekly basis, especially if you come from my riding in Brampton East, where the classic bank model still exists, in which that people do their banking in person. Right? And then TD goes over and above. So I'll example one of the banks, and they hire people that speak fluently in Punjabi and Hindi and Cantonese and Mandarin, so they can speak directly to seniors or new immigrants who are working really hard and open accounts in these institutions, and still, because of where they come from, don't trust that their money is going to go deposited through a machine or doing it online. So they come hand the cash to see it being deposited into their bank. And I feel like those are the type of customers that are vulnerable to deceptive sales practices, and we need to do a better job of protecting them. And then I further want to say is that when it comes to protecting consumers, something that I find completely unbelievable is the fact that advisor, spelled with an O, and advisor is spelled with an E. One is a regulated title and one is an unregulated title, yet banks use them both. If you know about this, why wasn't that put to a stop like right away?
Tedesco?
So the issue of advisor with an E or an O is an issue that, again, deals with securities, and we don't have oversight over.
That's fine. The only question is, was this ever flagged? At a certain point, it's not about the jurisdictional comment, right? Because, there's only one taxpayer, right? Your job is to protect Canadians, right, at the end of the day. So I'll pass it off to the Canadian Bankers Association, right? Your members are taking advantage of this glitch. Now, you could pass on the buck to me and say it's not federal jurisdiction, and that's fine. You're well within your legal right to do that. I totally understand the constitutional argument. But at a certain point, don't you think that an E and an O, and saying that a customer service rep can use financial advisor as a title because it's unregulated is the definition of deception?
I'm really glad you've raised this, because there's a lot of misunderstanding around this issue, and I'll let my colleague Ms. Stevens speak on it here for a moment, because I think it really needs clarification.
Yeah, advisor is a term with the E that is used in securities regulation for a defined set of functions, but an advisor is a more generic term. But the reality is that people are regulated based on their function and activity. So if they're doing certain functions would fall within the advisor with an E category, they would be regulated that way.
So,
Put another way, if you're in a regulated institution doing a regulated activity, the regulator is going to regulate you, and one vowel isn't going to change that.
it's a lot of regulations in one sentence.
Speaks to the industry.
I will say this, that if you're a normal Canadian and you walk into one of the big 6 banks and you come into, let's say, a university student that's working the TEL that day, and his title is financial advisor, the unregulated version, and he makes a pitch to you saying that you can save X by switching to X account, and you should invest your money in Y, and he gives that advice and you rely on that advice, that's an unregulated securities transaction, in my opinion. And from my experience, and you can correct me if I'm wrong, this occurs more often than not at our banks. And that, I believe, is an issue. And again, I'm not picking on the banks here. I just find it amazing that they would actually issue business cards between advisor with an E and an advisor with an O. Like, it just seems like a problem they shouldn't want to have. Wouldn't you agree?
As I just said, in this case, candidly, it's a distinction without a difference from a regulatory point of view. But at the end of the day, you should certainly expect, as a customer, that when you go in, the financial advice you're getting, irrespective of the title, is appropriate to your financial situation, and that the products and services that are provided to you suit your financial circumstance. That's what every institution strives to achieve, and that's what builds a strong customer relationship, and that's what builds a lasting customer relationship.
Okay, we will have to leave it at that. Is there any last comments that you want to make, Ms. Tedesco?
I just maybe picking up on that last point, if you're referring to perhaps tellers who are using the title of advisor, bank titles we don't oversee. It's not a specific consumer provision in the Bank Act, and that's what we oversee. However, if they're selling, if they're opening accounts, if they're selling credit cards, they have to communicate with people, consumers who are approaching them to purchase these things in a clear, simple manner that is not misleading. So that we can oversee.
With that, thank you all for your appearance today, and also thank you for the fairly quick time frame we asked you to appear under. You didn't have a lot of time of which to prepare for this meeting. We're on a tight schedule as well. So with that, thank you all for your presentation. Meeting adjourned.